Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into AudioEye's annual report, and let me tell you, it's less of an eye-opener and more of an ear-opener. Get it? AudioEye? Never mind. We will review the numbers, check out if they are improving or worsening, and most importantly, if this company is worth your investment. AudioEye is all about making the internet accessible to everyone, especially those with disabilities. They sell software subscriptions that help websites meet accessibility guidelines. They want to reach more customers, build brand loyalty, and provide a usable web experience for people with disabilities. But before we begin, let's keep in mind the forward-looking statements. Basically, because the future is uncertain, you shouldn't make decisions based on what the company predicts to happen. We will instead stick to the facts in this report. And now with that out of the way, let's see how they are doing. One major customer, including the customer's affiliates reflecting multiple contracts and a partnership with the company, accounted for a big chunk of their income, about 15% this year, slightly down from 17% in the previous year. This is not ideal since having a large portion of revenue come from a single source is risky. If they lost that customer, they would need to replace 15% of their revenue to be at the same spot as this year. Now for the bad news, they have a history of losing money. And 2024 was no different, racking up a net loss of $4,254,000. This is not that bad. It is an improvement compared to last year though. They also have a $7 million loan due in November 2026 that has some requirements attached. For example, they need to maintain a minimum amount of liquidity and revenue per month. It all means they have to perform to pay off that debt. So far, so good. Cybersecurity is a big deal, and AudioEye admits that breaches, viruses, and attacks could really mess up their business. It could lead to legal trouble, extra security costs, and a damaged reputation. They mentioned that our corporate systems, third-party systems, and security measures may be breached, so this is not a problem that is 100% solved. The good news is that as of December 31, 2024, they had $5.7 million in cash. It's important to keep an eye on that because having liquidity is essential to running a business. In November 2023, AudioEye started a program to buy back their own stock, planning to spend up to $5 million through the end of 25. They used some of that, but in March 2025, they shut the whole thing down. It means they are cutting spending. It might not necessarily be a bad thing, but it is worth pointing out. In a new announcement, they've started another stock repurchase program, this time for a larger $12.5 million pot. They can spend that money until early 2027, but the program can be ended at any time. Now, let's break down where AudioEye's money comes from. They have two main sales channels, Partner and Marketplace, which caters to smaller businesses, and Enterprise, which focuses on larger organizations and government agencies. For 2024, the total revenue increased by 12% over the previous year. Both channels increased. This shows their business development plan is working. Their cost of revenue, which is the money it takes them to deliver all their services, increased slightly, which is not bad since their revenue increased, so they're becoming a bit more efficient. Selling and marketing expenses also went up, mainly due to the ADA site compliance deal and some additional spending. While this can be worrisome, keep in mind that marketing spending can pay off later. Here's a positive trend. They've cut back on research and development spending by 27%. They explained that by saying they finished significant initiatives this year. This is good. It means they are becoming more profitable. General and administrative expenses, which includes legal, accounting, and operations, went up a bit due to things like transaction costs from the ADA site, compliance acquisition, increased stock compensation expense, and increases in litigation expenses of over $2 million accessibility requirements. Now let's talk about annual recurring revenue, or ARR, which is very important since that is the main model AudioEye sells. It represents the sum of fees they expect to get every year from subscriptions, contracts, etc. They ended the year with $36.66 million ARR, which is up 17% from the previous year. This is good since it shows they are still attracting customers, whooping back to customers. To wrap things up on the numbers, as of the end of last year, Audio had $549,000 in working capital, which is concerning since it was over $3 million the previous year. Basically, their short-term assets, what they expect to receive, is only barely more than what they need to pay in the short term. They have $7 million in debt to be paid by the end of 2026. One of their main tasks is to defend and respond to cybersecurity incidents. They have external auditors review their programs and make sure they comply with cybersecurity requirements. AudioEye has a code of conduct for its employees, which are available on their website. The report contains a list of subsidiaries. Right now, they have only one AudioEye Compliance LLC RTR. So what's the final verdict on AudioEye? While they are increasing revenue and gaining traction in an important market, profitability and some debt obligations are concerning, that one major customer still represents a significant risk. Cutting R&D might be good short term, but long term it might hurt innovation. Also, the high expenses in general and administrative might point to troubles, such as ongoing litigation that they themselves mention. In short, there's potential here, but some things need to change before AudioEye can truly shine. Keep an eye on how they manage expenses, diversify their customer base, and handle those legal risks moving forward. Thanks for watching. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more corporate decoder videos.